Okay, good morning everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you. Today is Tuesday, October 20th. Just getting now housing starts in the United States. Slightly weaker than expected on the actual print. Or excuse me, stronger than expected. 12 versus 11. Housing starts pops up 6.5%. So a nice beat there. You're seeing the dollar index, guys, hold a very clean weekly opening range to start off the week. Okay, the weekly opening range low comes in right at the 11,905. The opening range high just above that pivot we've been looking at, 11,929. But relatively speaking, we're still pretty unchanged for the week since the Sunday open. So slightly higher build here on housing starts. Building permits lackluster, down negative 5%, actually bigger than expected. Decline on that front, and a slight downward revision to the previous month. So a mixed batch of data to say the least. Okay, beat on housing starts, downward revision, miss on building permits, and a downward revision also the previous month. So not likely to see that print offer too much clarity here on dollar price action this morning. David, Merdad, Mark, Graham, great to see you guys. Lori says new to the service this week. When are the open pending trades posted? So Lori, the trending paid or the pending trades for the swing trades are posted after the market close every day. So you get the first one on Sunday ahead of the Asia market open, here in New York Sunday, I mean, Lori. And then each day after the New York close, so between 5 and 7, you'll see that swing update come out. You'll also get a tweet on the SB Squawk, so make sure, Lori, if you're not already, I think you are, but just in case, you'll also get those updates for the new reports there. Gary, great to see you. Mario, good morning to you, sir. All right, so it's been a little bit tight on some of these positions, not really seeing too much volatility. Remember, it's still going to be a big week for the Euro crosses. Yesterday, we took a real in-depth look at all of the Euro crosses I'll be focused on, namely Euro Aussie, Euro Pound, Euro Dollar, and Euro CAD have all been in focus. You got the ECB on tap on Thursday. And there's a lot of expectations that they might be more dovish. QE, another round of QEs coming. Whatever the case may be, the Euro crosses are certainly in a crosshairs as we get into that release. All right, so let's jump right in. Here's a quick look at the relative performance of just the dollar. You can see here so far in the session, pretty lackluster, weak against most of its major counterparts, with the Aussie being the star performer here, up 0.48%. Swissy is also up 0.4 alongside the Kiwi. Euro with a nice move off the support structure that we noted last night. That was a textbook rally, guys. I hope you caught some of that. Dollar CAD looking for a stretch higher before a turnaround there. So CAD is up 0.1% on the session. And then you have the Japanese yen here with down 0.2%. Quick look at the equity board ahead of the open. Here's what we're looking at. Got a mixed performance over in Asia Pac. Shanghai Composite was up 1.14%. Nikkei up 0.4%, but you did have some lackluster performances in other sectors. If we look at the relative performance in Europe so far, they're in the red across the board. U.S. equity futures also looking slightly heavier ahead of the open. So either way you look at it, guys, risk seems timid. Okay, you get these little rallies, you get these little pullbacks, but we seem to be still in sort of a consolidation mode on that front. Let's jump into the charts. As always, guys, feel free to throw out any questions, trade setups, whether it's regard to a specific pair or a specific methodology. Feel free to throw them on the message board. Also, for anyone who's new, Lori, just make sure you keep in mind that there is a camera button in the top right-hand corner of your GoToWebinar screen. You can always feel free to take a snapshot of any of the trades or any of the charts that you see presented here if you need them for future reference. Yeah, Mark, we'll definitely look at dollar CAD. A little frustrating for me, man. I literally got stopped out on the high tick. I think I had my stop a little too tight, so I am looking for re-entry on that front. But let's just jump through these. I guess we can just jump into dollar CAD first here, Mark, because it's right here. Here's what we're looking at last night. Well, let me just bring up the live charts. So the median line here was sort of the idea of which I was trying to play the short side exposure. I might have jumped the gun a little bit as far as the trigger was concerned. Real tight opening range as you headed into Asia. never really broke to the downside. I pre-shot that one, and the drop here fizzling out just ahead of the near-term target at 29.70. So here's what I'll say on this. As far as dollar CAD is concerned, the only concern I have, Mark, on this is that you could still see a stretch into 30.70. That's sort of the sweet spot of which, if this didn't hold, I would have been looking for re-entry on the short side from a scalping perspective. That's a basic 38.2 retracement off of the highs from late September there. You had a nice pivot in price right along that region as well. The median, the median line off of the highs comes into play right there. And you're looking at last week's high as well, just above, around 30.78. Mark says, yeah, that other median line, I have it drawn the same way. Exactly. That's my only concern about trying to get too aggressive on the shorts. And, I told myself, look, if we get stopped out, we break back above that median line, no problem. I'll just look for a re-entry right around that region. The spillover here is certainly very interesting in momentum. Okay, so momentum grounding out basically where we grounded out earlier in the week. And a turn ahead of 40 and a 50 break, if this does materialize, isn't too bearish near term. So I still think you could get that stretch, long story short, Mark, to the upside. None of the levels have changed, so the same levels that are noted here in yesterday's piece are going to be sort of the focus. Again, resistance confluence into 37, area of interest for possible short entry. You have the BOC on tap, guys, as you head into Wednesday. Not expecting any change to policy, but certainly the commentary that comes alongside that on the back of a much more dovish Fed is going to be very interesting to see if their language starts to change in part to the same type of wait-and-see approach. So looking to play this range, I might take another stab at it again if we make another run towards 30.70. A break below 29.70 would sort of put me back on track looking for that move into 28.99, 29 handle. Again, this is objectively the weekly opening range low. Again, remember on all the intraday charts, guys, each vertical line you see marked there is just going to mark the beginning of the week. So on the start of the week, we made an opening range low. We tested it again. And that's going to be lining up perfectly with the lower median line parallel here over the next few hours. So the levels are clear. We're just looking for an entry. I'd still rather take a short side exposure below 30.70. That's the near-term bearish invalidation level. Mark says, if that happens, of course, not so good for EuroCAD to hold today's highs. So EuroCAD's another animal we'll be looking at as well. I think you got a little bit different of an animal there just because Euro weakness or near-term Euro weakness may at least cap the advance on EuroCAD even if the CAD starts to rally. So if the CAD sells off, yeah, you probably see that thing stretch higher. We'll take a look at EuroCAD in just a moment, Mark. Let me just get through this sequence of pairs. Well, I guess we can just jump right into the scalp report. So let's just jump into yesterday's piece. Here's yesterday's intraday update. First up on tap is EuroCAD for you, Mark. So here's what we were looking at on the daily, just to put things sort of in perspective on where the broader trade is. A basic trendline resistance extending off of the late September high is sort of what's in focus. 148.75 is of critical resistance, and this is what would invalidate the broader downside slope that we've seen since the August highs. That being said, it is testing resistance. So you're at a make or break point, in my humble opinion, on EuroCAD. Momentum coming into that trigger dating back to the last month's high. Major critical and paramount support is right here at 45.16 to 45.90. Bigger of a range, but so is the ATR, so keep that in mind. And that's going to be the September lows, the opening range high for August, a basic 38.2 of the 2015 trading range, and a nice clean 618 extension off of the high. All stack up in this region. You can see we turned right ahead of it. So the levels are pretty well defined on the daily chart of where we really want to be looking on EuroCAD. On the intraday, it looks like this. Okay. So yesterday's piece, we were talking about, look, we're going to be looking for short exposure as we get into that 47.60 region, this confluence, and then up into 147.86, 147.90 would sort of be another sweet region. We'd be looking for possible resistance and short triggers. Well, we're trading there right now. Okay, we made it into that 47.60 region. This was actually a nice long scalp on a break of the Asia opening range. Remember, when we talk about opening ranges, we're focused on the first few minutes of trade, okay? And you look for that hour and a half sort of time slot at the start of the session to give you a high low, and look for a break of that to give you a near-term definitive directional bias. It's exactly what you got. Really tight range, topside break. 147.60 was the first target. 147.86 held like a charm, and then there was the pullback. This last stretch, while it did break above that 47.86 level we noted last night, quick look back here, and I was talking with this about Jamie last night. Here's a nice pitchfork off a little bit more unconventional highs, but seems to be defining price action a little bit better. I'll bring your attention to the median line, which caught the highs, the lows, and then that last stretch low. And here we are testing the upper median line parallel as resistance. So it's make or break from here. I mean, if we break higher, your next topside target's at 48.35. We'd need to see a move back below basically 47.30 here to get back with conviction. Whoop. At least from a scalping standpoint, start pressing the shorts again. Long story short, I am looking for a short exposure, and I am looking for short triggers as we get up into this region. As we say that, there's one staring us right in the face right now. It's a 30-minute trigger. Here's the 5-minute looks like. Remember, you want to take the lows in price action as far as your triggers are concerned, not necessarily the low in the oscillator, but more importantly, the low in price. And that's where you take your support and resistance triggers on. So let's see if that gives us any confidence on a downside move here in EuroCAD. I still, like I said, I like a hold here right now. We'll be looking for short exposure as we head into the U.S. Open. Mark says, laugh, laugh out loud, I'll say. I did the same, drew the fork just a bit differently. Exactly. I mean, sometimes it's not a science, guys. It's an art. So sometimes it takes a couple of shots. You need to see market move into your pivots to see if there's some wiggle room there. And if a reaction starts to happen off those trend lines, then you get a little bit more confidence in trying to trade against them or into them. But either way you look at it, whether it's a basic trendline resistance, the upper median line parallel, or a key 618 retracement from the decline off last week's high, either way, this is sort of a nice region where if we're going to hold the downslope, you'd want to see a little bit more of a conviction hold right there. All right. And guys, by the way, I just want to say one thing, because a couple of times over the last couple of months, we've missed some really beautiful triggers during the webinar. I just want to say, you don't need to wait for me. If the setups are starting to pan out and you start to see some breaks and tracking the market, by all means, don't wait for SB Squawk. We throw out a lot of different trade ideas throughout the course of the day. You have a plethora of sort of choices and different setups to work on. So, if the trigger's there and you get it, go for it. Any questions on EuroCAD? All right. Moving right along. We'll keep this here. I'll try to keep an eye on it. EuroCAD, I guess it would confirm under 146. I wouldn't even wait that long. For me, confirmation on the turn would be 146.66. And 146.66 is the low day close. All right, Mark, so if we make it back below the low day close for the month, I'd be looking to play a real nice short exposure into like 145.60 to 100 pips to the downside. We didn't get a tag of that. That's the exact low for the month. And then a break below that key support is really what would turn the entire trade more to the south side. Does that make sense? Remember, when we're talking about intraday positions, once a barrier is breached on a monthly standpoint, it tends to be a little bit more of a big deal. So if we close or push below the low day close after we made that low for the month, that would shift the attention back towards key support, and then this would be the broader bearish and bullish invalidation level. Does that make sense, Mark? He says, yes, I see it. Thanks. Mental note, keep monthly levels in view. Thanks. You're more than welcome, sir. More than welcome. All right. So if there are no other questions on Euro CAD, we will move right along. Next up on tap is Euro Pound. And this is one that we were watching next week, or last week, next week. We might be watching it next week, but this was one that we were watching with great interest. Look, the break below 73.86 last week was massive. It's such a critical level of importance, and that's really the focus region for the pair. And I'm staying bearish below that region. You're looking at the monthly open for October, the June highs, the reversal and high day close for May, all come in at 138, at 73, 86. Now, the median line off the highs is getting further and further away with that in time, but here's what the intraday chart looks like on Euro Pound. And here's what we looked like last night. Boom. So, by the way, on these reports, you can always click on the link at the bottom. I try to put the last update there. You can see on the 815, the targets noted on 815 were 73.40 and 73.08, and 73.08 is a critical area of near-term support. That is defined by a couple of different median lines and a 618 retracement off of the lows from late September. So either way you look at it, nice key area of support. We're looking to use this rally to get back on the short side. Bearish invalidation, we just noted it, 73.86. Okay, so into this trade, obviously you had a slight divergent signal here, but more importantly is where the divergence happens. And I always try to point this out to you because these are typically the strongest divergence signals, is when you have one reference point in the extreme and the other one inside. Now this one's barely inside, but you get the picture. So either an oversold, in deep oversold and above 30, or an overbought and way overbought and then sub 70. You can see price action with a lower low, oscillator with a higher low, not confirming an extreme in price. Trigger to the upside would have put us long here last night. Here's just a quick reference. When we're looking for divergence, it's always an easy point. I don't know who uses these high lines, but you can see the slighter low there and a much more dramatic low or a higher low in the oscillator. Use these tips near term to see a directional shift in momentum. Here's what Euro Pound looks like right now. The only thing I just want to say about Euro Pound, the only concern I get with trading this too actively is that, you know, it's a very tight ATR. They're sterling pips, so you know the potential risk reward is there. It's just your entries need to be a little bit more spot on. Let's bring up this chart. And what I wanted to point out here was just simply, aside from the trigger that you got here in momentum that we were just talking about, is an opening range that was super clean last night for Tokyo. I didn't take this again. This broke at the start of London trade, but you can see all throughout Sydney in light blue and in dark blue Tokyo, we held a very clean trading range, And even here, this is a very strong tell on the 5-minute. You see a downside move to test the opening range lows. Momentum drops into sub 40 territory, but price holds like a rock. The recovery shifts the focus back for a test of the highs. You inevitably broke through that. If you were to get faked out on this break, which you might have, again, momentum never failed or never pushed 40. So the entry would have been somewhere around 73.27 with a stop against 73.15, 73.13, looking for an 18 pip stretch, and obviously you would have gotten that on the upside. So just keep that in mind. We'll be looking for possible short exposure again as close as we can to 73.86. Remember, the weekly opening range high comes in right here. So we'll move that down, but the bearish invalidation level for the broader trade still remains with that key 73.86 level. So just to put things in reference, what the rebound was here. Remember, we talked about this in the webinar yesterday on Daily FX. If you guys were in that one, here's two median line structures we've been following. The first one, just off the most recent highs, seems to be defining price really well. There's a broader one off of the August late high, which also coincided right there. Don't have enough information yet to, decide whether this is going to be an active formation here. So in the meantime, we'll continue to work with that embedded one. Either way, keeps the focus weighted to the downside near term below 73.80. Why is 73.86 the point of invalidation, Lori? So great question, and it's for all the reasons that I just noted earlier, right? It's the monthly open. So typically if a trade makes it back through the monthly open after suffering losses, it suggests that traders have tried to make the push, the bears have made the push, they failed, back above the monthly open, shifts the focus higher. Secondly, it would necessitate, Lori, a break of the median line. So if we're trading within this structure, we pivoted off it, test it as resistance. This should act as resistance. If it doesn't, shifts the focus right back up into the upper median line parallel, right? Not to mention, Lori, all the other things that we talked about, aside from just the monthly open, the reversal and high day close for May. These are things that we tend to look at, Lori. You don't need to worry necessarily about mapping them out yourselves. We'll always point them out in the reports, but these tend to be areas that the market will pay attention to, both multi-month key highs and major reversal days, the closes of those sessions. So this is not just a reversal day, but it's also the high day for May. And that you can see has obviously offered some major resistance over the last few months. Coincides with this month's open and that median line. Make sense? So Lori, the only other thing I just want to point out to you, because you're newer here in the room, is keep in mind that the levels we talk about here and the invalidations and validations, these are really near-term in nature, right? If you're a longer-term swing trader, no, this thing could go right back into 74.20, could maybe even test the median line, then come right back down. For our purposes, if we break this, since we're so near term, I'd be looking to play long scalps into that region. And then we'd be looking to shift our attention back towards the short side as we get into that region. On a break of the lows, the major key support we're still looking for is 72.77, 72.68. Big region of support. You're looking at a basic 38.2. That's the least important thing. More importantly, guys, is the lower median line parallel for the formation here. You have 72.68, which is the gap breakaway that we made. It's been filled, but a level of interest nonetheless. All of this coincides just pips above the 200-day moving average at 72.58. So I think in the report last night I put, I just highlighted the 72.58 level because we were on the 30-minute, but I'll show you that in a moment. This is sort of the last-ditch effort, major support, and the target for any major long-term short positions that you have on tap. Lori, does that help? She says, thanks. All right. Right on. Feel free, as always, Lori, throw any questions that you do have throughout the session. So here's what the 30-minute look like. Again, it's pretty clean. The only trigger that's been on the short side here, low in price, gave out earlier in the session around 7:30 this morning, 7:45, about an hour ago. So on this downside stretch, we want to see that 40 level break to give us conviction that the overall momentum signature has turned over. If this holds and you get a topside trigger break, bail out of that position, guys. You'll probably see a run into the median line if that happens, if not the weekly opening range high before it turns over. So just some food for thought there. And that's what I'd be looking at for Euro Pound. Any questions on Euro Pound before we move off? All right, that's Euro CAD, Euro Pound. Next on tap, Euro Dollar. Sorry about that, guys. Give me 1 second. All right. Euro Dollar. So, wasn't too crazy about trading this one last week. We talked about it, but it was sort of irresistible to me last night. It worked out, but I want to be really cautious with encouraging too much long exposure until we get, a little bit more of a major topside break. I was tempting this to the long side with really small positioning. They did work out. They did achieve the first target, but again, we're right out of resistance. We came right into resistance and pulled back last night. So I don't want to get too excited. Here's what the trade looked like into the close of trade, or into the open, I guess, of Asia last night. This near-term support at 113.17, it's just simply the monthly opening range. So you know how we talked earlier about the opening range for the first couple of hours of the day, the first couple of hours of the session. We do the same thing on the monthly basis. And here's the monthly open for October. We pushed into a low, which found a low exactly at the 200-day moving average. You saw a topside pop, come back and test 1377, pull back, tested the lows it held. We sat there for a couple of days, tested the high. We finally broke through on the 9th, shifted the buys to the upside. An outside key reversal day off of the highs and off that median line, shifted the focus back down. But here we are testing the lower median line parallel and the monthly opening range high. So basic opening range objective outlook. If you make a break of the opening range high or an opening range low, and then it cracks to the downside, well, that invalidates the long trigger you were working with. Long story short, this was going to be the most important support hold here over the next course of the next few days. If we were going to hold, here we are holding above it. So the scalp looked like this. Again, this one on its face is just simply making a weekly opening range. So here's your weekly open highs. This is the new weekly opening range low. Look for a break of this range. Major support, or the support that we noted yesterday at the October opening range high, came in right in line with that median line. And that's exactly where we saw a nice charged bounce in the euro dollar. Again, divergence into the lows, price action making a lower low, the oscillator making a higher low. As I've always said, the closer these divergence signals are to the 50 region, the stronger they become, or the more significant that level becomes. So where do we go from here, Mike? You're doing a really good job of describing what price action has been doing, but what are you doing from here? From this point forward, the focus has to be on a break of the weekly opening range. The top side, what is that one? 1387 is the May high day close. I could be lying. I'm sorry. The May high day close comes at 1442. I think 1387 was just that swing high from May. So let me mark that up again. And this is the May high day close, 114.42. Sorry about that. So the momentum signature, again, on the way down from last week's high. Remember, if we just take a back look here at the momentum profile, we like to call it, a lot of these people who will teach technical analysis classes will tell you to look for short exposure off of the overbought condition. I tell you to take a look back, excuse me, and when you see multiple presses into the overbought condition, that is healthy in uptrends. Okay, and look for support at 40 in uptrends. Look for support at 40. In the exact opposite reference, you look for the short side of the trade to be confirmed with multiple breaks below oversold conditions and resistance ahead of 60. My long story short, guys, I know you've heard this here in the room if you've been with us for a while, but long story short, this is the first break into overbought you've seen since that high. So on the pullbacks here, you look to find support at 40 and keep the long side in play. On its face, again, we need to get through the weekly opening range high. Topside targets 114, 114.20, and then 14.43 is that May high day close that we talked about on the daily chart. If we break below, the bullish invalidation level still holds at that 13.17 mark. If we break below that, you're looking at targets down to 12.75. That's just a soft target. More importantly, the 618 comes in at 112.40, a little bit lower down there. So these are my favorite setups ahead of major key event risk, is when you see the opening range for the week taking shape above a near-term support structure, and that's exactly what we're seeing here in euro dollar. Look for support in that lower median line parallel, the October opening range high, and a break of the weekly opening range above that support should really give us guidance ahead of the ECB. Questions on the euro before we move off? Well, looks like we missed that trigger on EuroCAD just now, but still moves, looks good. On the shorts, guys, watch this trigger off the highs here to take you out of any short exposure if you do get that break. But it looks pretty good for a move into the opening range lows for Tokyo. But what I wanted to check was euro dollar. Same thing here. So on the 5-minute momentum profile, it's coming into support at 40. You're seeing that hold. If you see a topside break here, you're going to look for another run at the weekly opening range high, and this is what would validate the upside bias heading into the end of the week. Remember a couple of different things, guys. The reason we stay a little bit more nimble at the beginning of the week is, historically speaking, if you look at the statistics of it all, volatility tends to surge into the end of the week. So Monday, historically, is the tightest volatility day. And throughout the course of the week, as you head into the Friday session, volatility will tend to increase. Add to that you have the major key event risk on tap for the euro, which is the European Central Bank interest rate decision on Thursday. So I just want you to keep that in mind on all these euro pairs that we covered yesterday. Kyle says, great analysis, Mike. Thank you immensely. I appreciate that, Kyle. Cheers, mate. Always good to see you here in the room. Hamid says, can you please talk a bit more about momentum signature from scalping perspective? Yeah, Hamid, I mean, throw out a question here. Give me a specific on what you might need some help with. Definitely willing to give you a little bit more information on that. One thing I'll talk about real quick before we even get into that discussion is, guys, it's important to keep in mind that no momentum indicator, or any indicator for that matter, of an oscillator type is going to be forward-looking. They are all backwards-looking. They're not telling you what's going to happen. They've told you what's happened. Okay? So you have to keep that in mind. Most important thing. That's A. B, it's just used as a trigger to tell me, okay, now's the time to start looking lower. Now's the time that momentum is fading. We never want to be calling highs and calling lows, right? So when price is coming into resistance, how do I know if I want to sell or if I should expect the break to move higher? When price is coming into major key support, how do I know if I want to buy or if I want to look to play the break? And that's when we look for the momentum signature to tell us. Okay. And when we get these lower lows in price, higher lows in the oscillator, topside trigger breaks, meaning resistance trigger breaks, um, things like this will tend to give us a lot more conviction in playing the rebound, playing the reversal on some of these positions. So Hamid, I look for these triggers on the 5-minute to actually put me in the trade. Okay. On the 30-minute gives us a little bit more conviction on what the near medium term is doing. Okay. So when I get into a position, let's say I took a short against the opening range high for the week and I'm playing the short side, I'm still watching this trigger, although I'm in the position already. I'm still watching this trigger. And if this breaks, great. Maybe bring my stop down a little bit, take a little bit off the table at the next target, and play through the targets. So we use them on a couple of different scales. The only other thing I'll note, aside from those two main points, Hamid, is for your benefit, man, you have to keep in mind that nothing supersedes price action. So it doesn't matter what the momentum signature is saying when you're seeing major event risk, the market react to some unforeseen event. During these times of really extreme high volatility, you're not going to really want to pay too much attention to the oscillators. And B, doesn't take into account time. So if you get a trigger break, I don't know, at 5 o'clock, 6 o'clock here in New York, ahead of, the Aussie Open, after the US Open, spreads are blowing out. That's not a time I'm going to be looking at these triggers to actually give me workable and operable trades. So, these are all things that we put in our toolbox. I always use the analogy. It's like when you're going to build a house, right? You're not going to go there with a hammer and say, let's build a house. No, you need a circular saw, you need some staple guns, you need all kinds of different tools. And this is just one of them that we use. And the momentum signature can be immensely helpful if you know how to use it properly. The only other thing that I'll point out is that 70-60 rule, which is something we always like to see. Nothing is more apparent in that 70-60 rule than longer term scopes in a trade like the Aussie, for example. Actually, I think Kiwi is even bigger of a tell. So a lot of people will tend to overlook these basic things. And, when talking about a trade like the Kiwi, for example, which still everyone's looking to position for, a drop off into the 61 handle. I personally don't know why from here, because there is a market change in what the momentum signature is doing. This is a perfect example of what you're asking about, Hamid. So, longer term, Kiwi has been unable to break above 60 since July of last year, and that was when the peak happened. Every rally in price, failure at 50, still bearish. Failure at 60, still bearish. This is the first 60 break we've seen in over a year. Change in behavior. Marked change in behavior. And not only that, once we broke back above 40, it held a support on the pullback into the lows on some radical divergence. Lower low, lower low, higher low, higher low, higher low. So the rally that we experienced all throughout the course of the first part of this month, I was surprised as to the magnitude of it, but it's certainly wasn't to be too out of the unexpected as far as the directional bias is concerned. Lori says, what is the 70-60 rule? I call it the 60-40 rule, and that's look for resistance at 60 in bearish trends, look for support at 40 in bullish trends. 70 and 30 are what are typically the overbought and oversold conditions. If you read any technical analysis books, those are the levels that they're looking at. But there's a lot more information that can be told from this momentum signature than just overbought and oversold. It tells you a hell of a lot more than that. And not only that, Lori, get used to multi-time frame analysis. Look at what momentum is doing on the 30-minute chart. Get deeper. Look at the 5. Hell, when I'm jumping into a position, sometimes I'm looking at 1-minute charts. Just keep in mind that the deeper you get, the less emphasis you want to put on the trigger, because there's just too much that the oscillator is processing. Lori says, okay, I heard 70. I might have slipped. No, it's 60-40. 60-40 is the level of this that we're looking at. So for those of you who have heard this a million times, it's a good review. For those of you who haven't, I hope that offers some clarity and some a little bit more of a clearer picture of what we're doing here. Again, as we get through this, guys, on a day-to-day basis, that's what we're here for. Feel free to throw out any questions, specifics. If something's not clicking, do yourself a favor when you get into these scalps, when you're getting in and out of them, jot down real quick if it goes against you. What went against you? Why? Is it the entry wasn't that spot on? Oh, I went back and looked at the 30-minute. We were clearly, not in a position to be taking a short. I don't want to backtrack, but one last thing about RSI, since we got so deep into the discussion today, guys, is very rarely, extremely rarely, I would almost say never, but you don't want to try pressing a short with an oscillator in overbought conditions. You don't want to try pressing a long with the oscillator in oversold conditions. Meaning, I don't care if you get a trigger, if you get divergence up here into a trigger break, that doesn't mean anything because you're still in overbought condition. It's the act of breaking back below 70 that would be the trigger. Okay, I'll show you an example on a daily chart of the dollar yen. This thing stayed in overbought condition for like almost 3 months. Well, not consecutive, but you had a 2-month span here where it just stayed in overbought condition. Okay, if we went conventional wisdom with RSI and we're saying, uh-oh, dollar yen's in overbought, time to sell, it would have been a pretty crappy 2 months for you. Again, into the close of October, early November, highs for December, broke back into overbought. Again, people were saying this thing's so overbought, it's got to collapse. They had a pretty rough time there too, right? It's the act of breaking below 70 that's the trigger for the short side. And the same thing with overbought conditions. So what this means to us as near-term traders is if we're trading on a 5-minute chart and the oscillator is in overbought condition, even if I get some triggers, I'm really going to be reluctant to try to press a short. Okay, that just means the market has enough push. There's so many buyers that the signature was able to achieve that level. And I'm not going to try to fight stop a steam train that's coming against me. So just keep that in mind. Hope that offers some clarity in RSI. Lesson closed. Hamid says, thanks for your explanation, sir. That helped a lot. Cheers, man. Again, you're in the right place. Keep the questions coming. All right. Moving right along. We covered dollar CAD, or we didn't, euro CAD, euro sterling. Okay. So those are the updates from yesterday's intraday update, or those are the charts from yesterday's intraday update. Again, keeping in mind that we'll be watching all these euro crosses as we head into the ECB interest rate decision. The radar charts highlighted one other euro cross, which was the euro Aussie. And I just want to take a moment to talk about that. Really interesting levels here, kind of a messy setup, so I didn't want to make it a highlighted chart, but we're basically looking for this 56.30 region, 56.35 near-term resistance confluence. Here's what euro Oz looks like now. We're still testing that same range from last night. You did get a really nice short exposure and an opportunity to take a short back into the target at 55.59 that we highlighted last night. Again, the lower median line parallel saw a nice little pop. Let me just go through this with you real quick. There's a lot of lines here, but the only ones that matter to me right now are the descending slope off of the highs from September 24th, October 1st, and October 2nd. The upper median line parallel is in check. And the rising median line formation off of this month's low, specifically October 9th, October 13th, and this week's low. This was really uncertain if this formation was in play. But on the pullback last night, look where we found support. To the pip. Okay, so a very clean opening range, albeit a 200 pip opening range, doesn't matter. You have a much higher ATR. Again, for the guys who are newer to the room, we typically look for a quarter of the daily ATR as our profit targets. More so, are stops. So if I'm looking to take a scalp here on Euro Oz, rarely will I go above a 55 pip stop, maybe a 56, 57 if there's a major high or low. We don't do this blindly. That 55 pip range needs to be against a weekly high, a weekly low, a major uh, Fibonacci confluence or a major trend line. It needs to be something technically there. We're not just jumping to scalps at 55 pip stop. So just keep that in mind. Long story short, you got a very clean opening range. This is the resistance level in focus. At this point, you're essentially looking for that high that you stretched into yesterday. 56.38 break puts you on a more constructive approach towards that 59, essentially 56, 56.95 level. Momentum has been pretty lackluster. 60-40, 60-40, 60-40. So again, we'll look for a more market break on that front. Not really too keen on using that trigger that I highlighted here yesterday. It's just getting messy. Saw one probe through here, and we'll want to see something a little bit more conviction than this before we start jumping on the longs here. Lori says, are you saying you'd only put the stop at 25% of the daily ATR if there was a confluence at a fib? So it needs to be some or another important level, right, Lori? Another important level. It's something there. There needs to be something there. You know, the problem I have and the reason I get really personal with this, I guess, is because there are guys, you know, that will tend to scalp and then they just put a arbitrary blank number as their stop, guys. That's just, you're just gambling, right? So our approach is, or the approach for any good technical trader is that you need to have a game plan. So for example, let me just give you an example, Lori. Let's say price pulls into 55, 59 early into the US session. Okay, let's say we pull into this. But we don't get quite that deep, right? It starts to stall out and all of a sudden I get a long trigger from here and I want to jump into a long. Well, if 55 pips can let me put that stop against last night's low, sure, I'll take it. Okay? Not only because it's just last night's low, because that would also necessitate a break of the formation that we're looking at. So that makes sense. But from here, on a long position, stops all the way down against this region, doesn't make much sense, right? So we got to make sure that that 55 pips, that 60 pips, whatever you're looking at, is against a technical level. Doesn't necessarily need to be Fibonacci. It's just an example, Lori, but you get the point, right? Major high, major low, you know, major pivot in price, something, some sort of technical factor that you're looking at. Merdad says, what do you look to set your triggers in overbought and oversold? What do you look for to set your triggers in overbought and oversold? I'm not sure what that question means. So Merdad, it would be the break below 70 that would give you a trigger. Again, price needs to be somewhere, right? I don't just take a trigger based on RSI. Does that make sense? So if we're in overbought condition, when we break back below 70, that's going to be a trigger if price is coming off a resistance level. If we're in oversold territory and we break back above 30, that's going to be a long trigger if price is coming off support. Great questions here, guys. Please let me know if that makes sense. Okay, Mike, did you cover Euro Kiwi yet? No, I did not. Any other questions on Euro Oz before I move off? I didn't actually take a look at Euro Kiwi last night, just because Kiwi I'm sort of waiting on. Before I jump into this, I guess, Craig, let's just look at Kiwi dollar. Kiwi dollar is setting up a ridiculous sort of point here, and you know we're going to get a much more substantiated pullback. This is sort of the last high that you want to see made. I do think that broader, longer term, Kiwi does travel higher. Near term, I still think it's at risk for a little bit more of a pullback. Merdad, you're more than welcome. I appreciate that. So this is what I'm looking at with the Kiwi. So we've been holding this formation for like 4 weeks, right? Super, super clean. The deader slope from the lows that we made in September also held as resistance, broke, and got tested as support twice. It's like a typical resistance, support, support, right? So on the underbelly of this formation, your breaks as support, you expect to find as resistance, and that's what you got. Sliding parallel here that has caused some really nice pivots. It's catching the highs at this point. So for me, the focus range for Kiwi dollar is either a break below 67.80, which is again the weekly opening range low, or a break back above these median lines. Until you do, play the range. And you know, when we talk about looking for a weekly opening range break, doesn't mean we can't scalp the pair, guys. It just means when you're scalping the pair, your targets are all on the inside of the weekly opening range. So I got no problem if you're sitting around, you want to take a short against the high, sure. Looking for 20 pips, no problem, right? But you don't want to target anything outside the weekly opening range until you get that break. But remember, the weekly opening range is not a strategy in and of itself. It's part of our strategy. So even though this looked like a break of the weekly opening range last night, I'm not going to take it right into resistance. Resistance is only a couple pips away. So it's the compilation of all these things together that make the strength of the strategy, right? It's not just RSI. It's not just the weekly opening range. It's not just looking for intraday price action. It's the combination of all of them that gives us the conviction to either take a trade or fade a rally or fade a move. So that's Kiwi. So with Kiwi, we're sort of drifting sideways looking for a little bit more of a definitive break, right? So if you look at Euro Kiwi, Craig, here's what that looks like. I was talking with Jamie about this last night. I'm really faked out by this. I'm kind of sketched out for a couple of different regions. It broke a beautiful support confluence right here at 67.30 into 67.70. Much bigger range, but the ATR here is huge. One of our bigger pairs, 266 pips is what you put in on a daily basis, right? So you broke below 67.70, 67.30, and then you just came back and tested it right as resistance. So if the break here is going to be more significant, you'd expect that to give us a lot more follow through. I'd wait to see, what goes down here. Momentum is butting up against 40 after being in overbought condition, so you can't get super bearish down here. Trigger to the top side hasn't even got given out yet. The reversal trade for me would either be a break above this trigger and a break back above, essentially 67.70. Or a break back below the momentum low that we made last week and a move below this week's opening range low. That's sort of what I'd be looking to play right here, a little bit more of a no man's land. Euro key in the 30-minute, Craig, looks like this. Okay, so we're holding within the confines of this nice descending median line formation. Not the cleanest. You saw that sliding parallel catch a couple of the lows. This turn here ahead of that sliding parallel would suggest that you're at risk for a near-term recovery. So guys, a quick little tell here. When we're talking about pitchforks, just a quick crash course. If price is trading within the confines of a pitchfork, okay, and it's an ascending pitchfork, if price fails ahead of the upper median line parallel, turns and breaks the median line, that's a bearish development. Okay, so let's say we're holding this formation on the stretch to the upside. We fail right ahead of the upper median line parallel, then break the median line to the downside. That's typically a bearish move. With the same respect, in a descending slope formation, if we're trading within the confines of this slope and then price fails after breaking the median line, fails to tag the lower median line, turns ahead of it, breaks back above, that's typically bullish. Look what just happened here. Even the sliding parallel that caught the last few lows didn't get tagged, and we broke right back above the median line. So at its face value, you have a very clean opening range high. I would highlight this region. There's sort of breakaway as far as your recovery play. Depends on where we are in time, but essentially the opening range high, which is exact 38.2 retracement. Major support near term, right into that 65.35 level for the Euro key. 65.35, by the way, is the lows for August, just in case. I should probably mark that up for you. Make sense? If you're newer to the strategy, guys, I just want to caution you, use a little bit more caution and try to play a little bit more tighter pairs. So pairs that have 30 to 40 pip ATR is typically going to be your best plays as you're getting used to this. Pairs of the Euro Kiwi, Euro Aussie, the exotics will tend to be a little bit more, the ATR is a lot larger, so the implications of a couple of bad scalps can be a little bit more painful. David Fernandez says, thanks. Please go over an example of pitchfork for the 30-minute using the 30-minute if you can for the Euro. So I think we did that earlier, right? Here's the 30-minute that we're watching. I don't have a pitchfork beyond the one that we're looking at on the daily chart, that major one. That's really all that matters at this point. Could be in play, but it's a little bit messy. I'd probably be using this one. So the low in momentum. There's a pitchfork that could be in play that highlights near-term resistance right here. Again, it doesn't really matter, guys. I should take that back. It's not that it doesn't matter. Resistance is resistance. If it's because there's a trend line there, or median line formation, a Fibonacci level, resistance is resistance, right? So a lot of times someone will come out and they'll send me an email and say, hey, Mike, I have the same resistance level you're looking at, but I have my pitchfork drawn differently. Well, that's cool, as long as we're looking at the same level. It's all about the levels, guys. Nothing supersedes price action. Nothing. Lori says, Michael, is your strategy spelled out anywhere on the SB site? So if you go in the resource section, there's a couple of webinars there where we went a little bit more into detail on the 5-minute triggers and how to map them out. I would encourage you to go through that, Lori, right in the resource section of SB Trade Desk. Scalping overview, just click on that. Nice little webinar here. We went into much more details about the basics and the process of formulating the triggers. Also a little opening range breakdown there for you and a review of that piece of the strategy. Lori says, got it. We'll check it out. Thanks. Cheers, Lori. Again, welcome aboard. And it's great to see you here in the room. Mark says, don't know if you want to post, but a good page with the 5 most used things to know about pitchforks. I'll take a look at it. Mark, thanks for sending that over, man. Let me save that up right now. Yeah, I think I've seen this website before, actually. So I'm going to go ahead and post this for everyone to see. A little breakdown, 5 rules for using Andrew's pitchfork. Thanks for that, Mark. I appreciate the resources, man. I've seen this before. So I don't want you to get too caught up with the mechanics necessarily of how this works and Hagopian's rule and all this. Just know the basics of how the pitchfork is drawn, and more importantly, how we use it to effectively trade. Strategy is all good and dandy when you put it on paper and you can make it all pretty and stuff. The bottom line is, how does it perform, and how easy is it to pick up? So I hope that helps, guys in the room. I think I got everyone's questions. Euro Kiwi got. Euro Oz, Hamid, we got Euro Oz, right? All right. So before we wrap it up, a quick overlook at some of the commodities that we've been following. First up is gold. Look, I like it. It's not so telling here on the daily chart. I don't want to get too heavy on this. More so, interestingly enough, for gold, the charts that are of interest to me are the weekly and the. I should have sent it to all guys, that link. The weekly and the 30-minute. So the weekly chart we've been talking about here for a couple of for a couple of weeks now. Here's what it looks like. The major break above 1155, 1151 was sort of the thing that pops this off, sets it off, a major key pivot in price. Here we are now breaking back above a basic consolidation trendline support, or former support, acted as resistance earlier this year. Now it's support again. And the focus range is either a break above the 200-day moving average, i.e. the median line. That comes in, I'm sorry, this is the 52-week moving average, and the median line, which comes in right around 1180, or a break below 1151 would sort of invalidate the long call. Very similar to what we were talking about as far as the longer term RSI signature. You know, we've seen this one continue to maintain 60 resistance more or less for the last 2 years on a weekly basis, but more divergence, lower low, lower low, the oscillator holding the lows. Okay, not only that, the rebound that we saw earlier back in September, the low that we made on that pullback was the exact low week close. That came in at 1098 before we reversed to break the highs. This is constructive. My concern near term is that you could get a little bit more of a pullback. And here's what the 30-minute chart looks like for gold. So I was putting this, or I was keeping this in view yesterday. Here's that near-term pitchfork. This is just off the lows from September, right? And you can see that we came right into a confluence region last night, kind of probed a little bit below it, but here's the topside break. Long story short, I'm going to get rid of this here. Well, I'll keep it for now. It's acting as support, but long story short, very clean weekly opening range. And gold has been a very nice player of the opening range strategy. So here's your weekly open. You set your opening range high. You set the opening range high. You're at support. Test the opening range high. You're looking for a validation break above 1177, 1180 to target that 1190 region, or break back below, and you'd be looking at that key support that we noted on the daily chart or the weekly chart, 1150, 1151. So a turning point here for gold. Also oil, a quick look at that. Just to note, that support region that we talked about yesterday was the exact low, 45.87 at 38.2 retracement off the lows. Also that basic trend line, you're at risk today if we close outside this. We haven't done that yet. We're probing there now. If this recovers into the close, it'll look like it never even broke. So watch this support region. If we do break 45.80, in crude, look for a much more, or a test rather, of that 43.50 region, which was the lows and a nice Fibonacci confluence from last month. All right, so quick update on the com block there, and obviously, as we've been following, guys, watch that dollar index. You know, again, we could get a stretch higher into that resistance confluence right at that 100-day moving average, but long story short, broader trade remains at risk to the downside below that region. As far as data is concerned, watch again for BOC, which is on tap. We'll be watching those CAD crosses. We'll give you an update later today. Aside from that, if there are no other questions, we'll go ahead and wrap things up, guys. We'll see you tomorrow morning, same time, same channel, 8:30 Eastern. Again, also the midweek strategy webinar will be tomorrow at 1 p.m. as well. Best of luck trading to everyone in the room. I appreciate all your comments here, Lori, Mark, David. I will see you tomorrow morning. Cheers.